Okay. Well, we'll just get started because we do have a lot to cover. So like I said, I'm Debbie Huscher, and we are here just to talk about what is happening in the market right now and how this would impact a buyer. Obviously, every day there's new news, everything like that. And full disclosure, we are not going to be giving you predictions of where things are going to be, but what we're going to do is state the facts and what we are seeing in the marketplace. So we're all in varying places, and we're here just to help and just give you honest feedback and our opinions of what is happening in the market. So on that, the Huscher Group is going to welcome, got to go to my slide, hold on. Okay, so here we, so on the call, Debbie Huscher, that's me. We have Ellen Paklos. Ellen, are you there? No, she was trying. I know Claudia's
She's
here.
logging in.
Okay, Claudia?
I'm here. Yes, can you see me?
I can see you. And we have Tanya Bottaro.
Hi.
Yes.
Pam and Doug, thanks for joining.
Yeah.
And we have Chris Blum, who is our mortgage guru here and is able to, if he doesn't have the answers, he will get you the answers. So without further ado, let's start talking about the myths that are going on out here. And the first myth is you must have 20% down. So Chris, take it over.
All right. Well, first and foremost, thanks everybody for joining. I want to apologize for wearing a hat. I normally wouldn't wear a hat, but given the circumstances, I can't get a haircut, so I've got to wear a hat to cover my head, which is so again, apologies. I'm not normally this formal or casual. I should say. Deb, can you push those slides forward at all or no?
I can go back to this view and see if that helps.
Just so I can see the myth we're talking about here.
Oh, you must have 20% down.
There we go. There we go. Awesome.
There you go. Okay, we'll switch it that way.
So myth number one, you must have 20% down to purchase a home. This is not true at all. I get this question asked all the time. There are a lot of products out there that allow for as little as zero money down, 3% down, 5% down, 10% down. I would say that the majority of the transactions that I do are not 20% down. There is this evil thing called mortgage insurance that everybody gets afraid of, but it's not the end of the world. Mortgage insurance is just a means to an end. It's a means to get you into a home if you don't have 20% to put down. So don't be afraid of it. You know, it's that means to an end. So you don't have to have 20% down. You don't have to save up your entire life to buy a home and then, you know, just to avoid mortgage insurance. It's not the end of the world. And it's also not as expensive as it once was. There are now several suppliers of mortgage insurance. So we have ways to shop on your behalf to save you some money, even if you do fall into that mortgage insurance category. So again, it's not the end of the world. It's a means to an end. You can get into a home with as little as 0% down, 3% down, 5% down.
Chris, real quickly.
That is a terrible misnomer. But
sorry to interrupt.
Nope.
So regarding the PMI, how long does that last? Like if can you refinance or what is the length of that?
Yep. So it depends on the program and it depends on how much you put down. So let's start with the basics. If you put down as little as 3.5% down on an FHA loan, which is just a government insured loan, your mortgage insurance is going to be permanent. The only way to get out of mortgage insurance if you have 3.5% down on an FHA loan is to refinance out of that loan. With every other loan, any conventional loan, your mortgage insurance will go away once you reach 20% equity. Okay, and that's all set by, and I hate to use these big terms, set by an amortization table. So depending on how much you put down, that's gonna determine how long it takes for your mortgage insurance to go away. That's a great question. I get asked that question all the time.
Okay. If anybody has any questions, please just pop them into the chat, or if you want to jump on and ask it in person, go right ahead. But if there's any burning questions, please just give us a call or just chat it down there. Okay, so you don't need 20% down, but what about your credit score?
The big one. That's one of the one of what I call the 3 C's of borrowing or 3 C's of credit is absolutely your credit score. It is a determining factor in your rate. It's a determining factor in how much your mortgage insurance will be if you in fact have mortgage insurance. It's also a determining factor nowadays in what your homeowner insurance can cost you. So credit score is imperative. However, you don't have to have perfect credit to get a mortgage. We do a lot of loans for clients who don't have perfect credit. There is no such thing as perfect credit. I don't know what perfect credit really is, but we'd like to see no blemishes. We'd like to see no bankruptcies, no foreclosures. But just because you have that doesn't mean you can't get a mortgage. You certainly can.
Okay. We always are getting asked this question about, is now a bad time to buy a home? And so, Tanya, what do you want to share?
Sure. So we get this question all the time, especially now. People are asking, is it a bad time to buy a home? Should we wait? Should we move forward? If any of you have taken a look recently at our social media page, we're going through every Sunday and we do what's called Sunday stats. So on this one, for example, it's got April 27th through May 3rd. So that during that week period, excluding Greenwich because they have their own listing MLS down there. This is just some really good information, I think, to show people that things are really still happening, whether it's because somebody needs to relocate, they were in the middle of the process, whatever it may be. These numbers are, the new listings that we have, over 800 new listings, ones that were just, that have gone under contract, over 1,000. And then closings, 877 closings in that week period. And again, this is just the state of Connecticut, excluding Greenwich. So these are some numbers and some information that we'd like to provide. We have it on our social media page every Sunday to go through and kind of let you know and kind of keep you up to date as to what is truly happening out there in the state of Connecticut.
And on that note, just what I'm seeing also is that there are certain price pockets where inventory is very low. And as a buyer, when you're out looking, having that pre-approval is critical, not just a pre-qualification, but a pre-approval. And I actually had some buyers and we were in a multiple bid situation one day on the market. And the other thing that I'm also seeing is more letters that are being written by the buyers. I just had a listing that went under contract and everybody wrote a letter, and that emotional part does come into play. Obviously not on foreclosures, but that's also some trend that we're seeing right now, that the personal of why you should be chosen, and we can definitely help with that. Anybody else have anything to add on that? Okay.
I'll chime in, Deb.
Oh.
Sorry,
Tanya.
That's okay.
As far as timing goes, I mean, I'm the mortgage guy, so I'm gonna tout this a little bit, but rates are as low as we've seen them really ever. So, from a timing standpoint, although we know that we're dealing with very tough times right now with external factors, from a timing standpoint and a rate standpoint, this is as good as it's going to get. There's really no room for rates to drop any further than they are right now. So if we're talking about timing from a financial standpoint, taking the emotional stress out of what's going on out of the picture, this is as good as it's going to get.
All right, this next chart, somebody wants to chime in. Obviously, the economics and the economy are at the forefront of a lot of people in their minds. And there are some people who are definitely furloughed, or their career is based in an industry where they are not working right now. But there is that fear of, okay, what's going to happen? Are we going to be in a Great Depression again and everything like that? So somebody wants to take over about what has happened in the past recessions when it comes to home prices.
Yeah, I'll take it on this one. So this chart, and feel free to chime in. This chart to me just says, it's showing the different variations, from back in the 1980s until what happened in 2008. In 2008, they had that huge drop. And anybody who knows, for example, if you bought or built a home in the height of the market, which they would say 2004, 5, and 6, if you bought or built a home during that period and you had to sell in 2008, you knew there was a huge price difference. It's, you know, they were overinflated, the numbers, and Chris, you can probably speak to that a little more than I can, but the numbers in the home values at that time at the height of the market were overinflated. And then when you were going to sell that property, they just didn't have the value in the homes at that point. So this one, I think, basically we're talking a little bit about, you know, the prices right now are significantly more stable. So if you look at this chart, it has 2000 to 2005, the years that led up to that crash, and then you're looking at 2014 to 2019, it appears to be much more stable. And also when we say a stable market, we're talking about, you know, people having more equity in their homes truly being worth that value and not having those overinflated numbers in them.
Oh yeah, I remember in 2001 when I got in the business and they were doing stated income, giving 110% of the value of a drive-by appraisal. So there, the inflation was definitely there. And one thing that I also noted here, in the 6 years leading up to the housing crash, the highest growth was 6.5%. And in the last 6 years, 6.4 was the highest. So we weren't even in the field of where it was in the early 2000s. All right, any questions on that? Okay.
No, I think, Deb, real quick, I think that's actually a great graph that we actually talked about in our team meeting earlier today. That graph is very powerful because that's the country as a whole. And I think what our buyers and sellers need to understand is that New England is on the more conservative side, especially in where we are in the central Connecticut area, Middlesex County. We don't see the kind of spikes that some of the country has seen. So you have some outliers here with like your Nevadas and your, you know, Southern California, Southern Florida that are in these numbers even more. So I think that we're even in a better position in what this chart actually shows us.
Yeah. Yeah, this is national numbers, and I believe that Connecticut is lower than the average there. Okay, so another myth. So you give us some pre-approvals, Chris, right?
This is a good one. Who's going to touch on this, Claudia?
I thought this was still you, Chris.
All day. No, listen, you guys know I'll talk all day. I didn't want to steal the show here.
You don't want to be a webinar hog, right?
should you purchase at the top end of your pre-approval? You know, I've always tried to live my life and, you know, give advice is, you know, just because you can doesn't mean you should. The top end of your pre-approval is just what the bank will give you. You know, we can't adjust for your comfort in life. And, you know, do you want to be house rich and cash poor? Do you want to eat pizza out of a box every night? I mean, I love pizza, but not out of a box every night. So I don't want to be strapped to my house. So I don't want to get the absolute most expensive house that I can possibly afford, or, you know, the most expensive house that the bank says I can afford. We touched on this today. You know, we would prefer that we get a, you know, what's your comfort level, not what you can afford. What's a payment that's going to make you comfortable? How can you continue to live the lifestyle that you live, you know, and still carry a mortgage?
Yeah. Well, and also other variables come in place, like how much the taxes are, and what is that monthly nugget that you feel comfortable with?
Right.
All right. I think I'm next, right?
Yes.
Myth number 5, it's cheaper to rent than to own. This one we get a lot, but I think a better question is, a lot of people say, can I really afford to buy? You know, I worked with a client that had rented their entire lives, and they just were in such a habit of it. You know, they were used to that routine, and I don't think it had even occurred to them that they could afford to purchase. So the graphic here shows that it actually is cheaper to purchase. It says that 28.4% of your income is needed to afford the median rent, while compared with 17.5% of the income needed to afford to purchase the median home. These are national numbers. surprising to even me, but it's true. But I think for anybody who's considering, purchasing and who hasn't, it really is in your best interest to talk to somebody like Chris Blum, and he'll ask for some basic information, and in the space of an afternoon, he can answer two really important questions for you. The first one being, can I afford to buy right now? With interest rates at historic lows, I hope that, the answer might be yes. If it's not, however, Chris might be able to position you to do what you need to do, in 6, 8, 12 months, do a few things that would then put you in a better situation to purchase. But I just think it's really worth exploring, and it doesn't take a lot of time to figure that out. The other thing I wanted to bring up that's kind of related is we do get a lot of people who ask about lease to purchase. To me, that is the great myth. I honestly, as much as I've poured over the MLS, I just haven't seen much of that. It doesn't exist very much. So I do want to say that those kind of are the white whale out there. Those properties that property owners are willing to do a lease to purchase. So I think you kind of need to be on one side or the other. Either you're purchasing or you're renting. And that's what I have on that myth.
Anybody have anything else to add there?
I do, and I know it's going to sound like I keep chiming in, but as these slides go by and as I hear you guys talk, and I kind of get some thoughts in my head about renting versus buying. The one thing that's going to be a solid is going to be your mortgage payment. So if you take on a 30-year note or a 15-year note or 20-year, whatever your term is, that payment outside of some possible taxes and insurance adjustments is not going to change. You don't have that as a tenant. Right? So if my lease will stay the same for 12 months. So I sign a 12-month lease for the most part. That's the most typical lease, I would imagine. My payment's going to be X for the next 12 months. Well, on month 13, that landlord can do whatever they want. They can raise that rent. And we see it all the time. They can raise that rent as much as they want. And if you're stuck there, you don't really have an outside of, moving to another lease or possibly going to buy a home. So there are some levels of security when you have a mortgage, because when you sign that dotted line, that payment cannot change, right? So you don't have that with a lease. You have, like I said, you have a 12-month window. With a mortgage, you usually have a 30-year window of safety. And that actually just popped in my head as we were just going over these slides. But that's pretty powerful if you think about what somebody can do to your rent with really not much warning. I mean, I know that there's got to be some state laws, and I'm sure they are. I don't want to overstep my boundaries here, but that level of insecurity scares me. Unlike a mortgage, which is secure. So you have that when you buy versus renting a home.
Chris.
Debbie.
What are the rates right now? Just a snapshot. I know they change every day, but what are the rates today?
It comes up every day. We are locking right now 30-year fixed as low as 3.125. And the only reason I say as low as is because it's difficult for me to just give a rate. But rates are, whether you get the best rate or the second best rate or the third best rate, rates are at historic lows no matter how we slice it. No matter which side of the fence you're on, you're going to get the best rate you've ever had an opportunity to get.
I know my first mortgage, 2000, 8%, and I paid 2 points for that. Crazy. So 3.1 is amazing. So are there any questions? I didn't see any hand raising, but you can definitely reach out to us afterwards. But the one thing that obviously is important is safety. And Ellen, talk about safety, as you see right there, right?
Well, I didn't have time to take the mask off, but I showed a house today, wearing gloves, taking shoes off, wearing a mask, hand sanitizer, wipes. I mean, that's what you have to do. And my clients, I had gloves for them, and they brought their masks and, took their shoes off. So And they put an offer on the house.
Fingers crossed.
The most
The
important
other,
part.
the other thing that we're advising our listings is for the homeowner to have all the lights on and to have all the doors open so you don't have to touch anything.
Right.
Right.
And I know, Tanya, you've been kind of creative with your stuff that you've been doing with FaceTime.
Sure. So I've been trying to do a lot. I have some clients that are relocating from out of state. Obviously, they can't come up here right now to look at the homes. So I've been doing Zoom calls on my phone and kind of taking them through a neighborhood, driving them in and out to show them what the frontage looks like, to show them the outside of the house, also the inside. And basically, you know, as I'm going through, it's minimizing the risk to the sellers because it's just me coming through to do the Zoom call. But it's the best way that I can get my clients into that home. So I've got my mask on, I've got my gloves on, I've got my phone on Zoom, showing them kind of everything that I possibly can on the property. But then again, trying to minimize the risk to the sellers. So it's, you know, you wear all your PPE as you're going in and making sure that when you come out, you're taking your gloves off, you're changing them. If you're going into another home, you're putting on new gear, things like that, like I say, it's a market where people still need to sell, people still need to buy, and we're here. We're working for you now and when it ends, but we'll do virtually and in person if, you know, safely.
Yeah. And Ellen, isn't this the house that the offer was put on, that Claudia was at right there with her hand sanitizer?
Yes, the lights. Yes,
Yes.
that's
Yes.
the house.
A little flip house in Durham there.
That's the house.
So on that note, if there's any questions, I don't see any hand raisers, but here's our contact information, Chris's information, and as always, we're here just to let you know what we're seeing and how we can be of assistance, whether it's buying, selling, refinancing. I was on a call today, Chris, and they said if your mortgage has a 4 in front of it, you should be talking to a finance person about refinancing.
Call on that number on the screen right there.
Yeah, I'm gonna
There you
second
go.
that. Yeah, if you're in the 4s, you need to be talking to Chris.
I think that we'd be remiss real quick if we didn't ask Kate to just chime in for 10 seconds. I don't mean to put you on the spot, Kate, but can you just let us know, you know, closings are still happening. You're doing closings. How are you doing? How are you doing it so safely? You know, it's amazing what you've done in this amount of time. And, you know, we've all adjusted this crazy time. And yet we're still closing transactions.
Yeah.
Can you chime in on that real quick, if you don't mind?
Absolutely. I would say, you know, I expected it to be slower. It has not really been slow. It's been challenging for sure. But we took a few weeks to really think through how we can keep clients safe and especially comfortable and still do the things that they need to do to buy and to sell. So we have various ways that we can sign closing packages, whether you're a seller or whether you're a buyer, to make it comfortable for you. We have a policy in our office. Number one, any person that comes in the door has to be wearing a mask at this point. And also they wash their hands immediately. They come to our conference room where it's big enough and large enough that we can social distance from the person who's actually signing. So if you're refinancing with me or buying and need to sign a loan package, you're doing it in a conference room with just me, sitting at the loan chair at the closing table with tabs on your closing package so that I don't even need to approach you to explain things, or if you have questions, or to point out where a signature is needed. So we do that. We sanitize before anyone comes to sit down, and then when they leave, we sanitize immediately again. And if people are not comfortable even coming into the office, I'm calling it the drive-through closing, where people can drive to our office, park in our parking lot in the back, and I have brought many a closing package and or seller documents out on a clipboard with a brand new pen that's never been touched and tabs, and letting people close from the comfort of their car while I have my umbrella on rainy days. So there are lots of different ways. I'm sure some people have heard about how you can actually Zoom like this and close a file, and those things are possible as well. And we really just take our cue, I feel like, from the clients. I mean, it's how are they comfortable? What are they comfortable doing? You know, and we try to accommodate as best we can. So.
That's why you're wearing the lipstick now, because you always have to wear a mask outside, right?
Right.
That's right. No.
Okay, well, that's all we have. I mean, obviously we could keep going on for hours and hours and hours, but we wanted to at least talk about the 5 myths. And we're going to start doing this on a regular basis. We'll have different topics, and we'll be sharing this out if you have anybody that could benefit from it. And I want to thank everybody for their time. Have a good night.
Thank you, everybody.
Thank you.
Thank you for
Thank you very
joining us.
much.
Thanks, everyone. Be safe.
Thanks. Stay well.
Bye.
Bye.